So today we will be discussing on cost of capital concept. So previously we have discussed on various concepts. Please can anyone list down me what are the concepts that we have covered in unit 2?
Types of equities.
Types of equities, cost of equity, different two methods to calculate the cost of equity. So we have covered on equity and debentures part. So now today we will be discussing on cost of capital. So say me, what is your idea on cost of capital? What it would be? Which return we expect from the capital investor, but that is cost of equity. But in case of a cost of capital is nothing but cost of capital is that the return that a company should definitely earn at the end of any kind of an investment to retain its value inside a market. Clear? For example, I am a company ABC Limited. I am making a capital investment of rupees 10 lakh. So I am expecting a minimum return of rupees 5 lakh is much needed into my business to sustain in my market, or to make a value to my companies and to give a value to my shareholders and to my investors. So in this case, cost of capital is a minimum amount of a return definitely a company should earn in order to retain its values and to increase the share value of the company. So this is what a cost of capital. So the process involved or a structure involved in cost of capital is that a total cost that is involved in generating the capital into a business is cost of capital. To make it more simple and easier, the minimum return or investment that a company should earn in order to retain its position into the market. So coming on to cost of capital, so these are, so for example, let us make it in a story format. In this case, it would be more clear for you people. I am ABC Limited. I am going to start a new bakery. Here, I need rupees 10 lakh as my investment. This is what is scenario. So how will I generate rupees 10 lakh? So that process is called as cost of capital. I am bringing capital into my business. So the cost that is required for me to bring the capital inside business is cost of capital. So I will generate capital of rupees 10 lakh through various sources. So those sources, the cost of capital is either through equities. I will borrow through equities or either through debt, bank loans or anything, and preference shares. By issuing preference shares, I will be earning money. So these are the sources that I will be generating. So these are the components of cost of capital. Here, so first one is cost of equity, which is termed as K. For example, I want to generate rupees 10 lakh. In this case, I am going to my friend and I am asking him to buy the shares of my company. So he is buying he is giving me rupees 2 lakh. Here, my friend gives me rupees 2 lakh at 12% equity. Make a point, please note it down. ABC Limited wants to generate rupees 10 lakh. So firstly, to generate rupees 10 lakh, what I am doing is that I am going to Mithuna. Okay, Mithuna is my friend. I am going to Mithuna. Mithuna is giving me rupees 2 lakh at 12% equity. Clear? So second option is that I am going to bank. Cost of debt. I am going to bank and asking for rupees 5 lakh. Okay, rupees 5 lakh at 10% interest. Clear? Rupees 5 lakh at 10% interest. So note it down, rupees 5 lakh at 10% interest. So rest of the amount how much I need? I got 5 lakh, I got 2 lakh, rest I need 3 lakhs to generate 10 lakhs. So rest of the 3 lakh I am going to another friend of mine. I am going to Keetana and I am asking her to buy my preference share. Okay, so Keetana is buying my preference shares and for rupees 3 lakh. She is investing rupees 3 lakh into my business. So totally how much amount I have with me? ABC Limited has 10 lakh. So 2 lakh from my friend through equity shares at 12%, bank interest at 10%, and preference shares I am having 3 lakh. 3 lakh I am giving at 12%. Let us keep it 12%. So in this case, the concept is that at the end I have to return. The total cost is that I have to return the amount of rupees 2 lakh. In 2 lakh, 12% I have to pay monthly to Mithuna. Clear? And to keep the bank loan, to bank loan I have to provide 10% of 5 lakh in monthly basis, and to Midna for preference shares in 12%. Out of 3 lakh, 12% I have to pay for regular basis. So this is what the cost of capital. So total 10 lakh to generate, to earn the total 10 lakh cost of capital into a business, I am using various sources to generate rupees 10 lakh. In the regular basis, I have to give them return them back the cost. So that is what cost of capital. So the formula for calculating interest for bank, while you are paying interest to bank, after tax, there will be the interest rate before tax. I have said 10%, right? So the 10% is before tax interest. So while coming on to tax, a few reductions will be given to you. So the formula is KD after tax is equal to KD into 1 minus tax rate. So we will be, first of all, note down this formula. Let's detailedly discuss what is concept. So while you are doing a problem, you will get to know this much clearer. As of now, you would have been understand, but you would have few confusions within you people. Next, we will move on to a sum, so that will be much clearer to you. So on the formula for cost of preference share is that dividend divided by net proceeds into 100. NP is net proceeds. Note it down. Net proceeds. Dividend divided by net proceeds into 100. What is net proceeds? Any idea? Net proceeds is nothing but the total amount that ABC Limited is receiving through issuing a preference share. While I am issuing a preference share, if I am issuing 100 preference shares of my company to keep the total amount that I am receiving is called as a net proceeds. The total amount I am receiving, deducting all floating costs, all commission costs, I am deducting all those costs, and the rest of the amount I am having as my amount is termed as net proceeds. Here, whenever I am issuing a preference share, there would be a brokerage in between. I have to give a commission amount, I have to give a flotation cost. So deducting all those costs, the rest of the amount that comes into a business as the ABC Limited's own capital is termed as net proceeds. Clear? So note it down. Net proceeds is equal to preference amount received from preference share, deducting all commission costs and flotation costs. Clear? So the next one will start. So to give a brief summary of cost of capital that we have discussed, cost of capital is nothing but rising fund for your business. To start a new business or to rise up your business, you are raising the funds through various sources, either through equity or bank loans or through issuing preference shares. So next one is that if a company earns less than the cost of capital, let us assume my cost of capital is rupees 10 lakh. If I earn less than rupees 10 lakh, then the share value of my company will be decreasing. The value I give back to the shareholder will be decreasing. So the investors cannot invest into my business. Here, this is what the concept. If at all, if I earn more than my cost of capital, more than rupees 10 lakh, then the value of my company gets increased. So this is what cost of capital. So based on why we are learning cost of capital, why cost of capital is most important in the sense to make a decision whether to invest inside a business, whether this generates a profit into my business, whether my business gives a value to the shareholders. Whenever shareholders invest inside a business, what they expect?